So what if you can just make 20 pips per day in the market? That means if you risk $1 per pip to make $1 per pip, that means you can make $20 a day with a small account. Or if you are using a standard lot and making 20 pips per day and making $10 per pip, that means you can be making $200 per day. Well, in this video, let me show you a simple strategy that you can use to get 20 pips per day in the market. But first of all, I just want to say making 20 pips consistently in the market can be very, very difficult because there's going to be losing days that are going to come no matter how good you are. But then if you can manage to get these 20 pips per day in those days that you are successful, I hope that at the end of the month or at the end of the year, you'll be super profitable. So let me share with you a simple strategy that you can start using today to try and make 20 pips per day. And why 20 pips? 20 pips is a good number because for the market to move 20 pips in a day, it can take less than 2 hours. So which means you can place your trades and you can see your results in about 2 hours. If you fail, you can go ahead and find another trade in the same day, or else if you pass, you can just go ahead and know that your job for the day is done. So 20 pips is a good number, is a reasonable number. You can get a lot of opportunities and a lot of take profits being hit with only 20 pips. So all your trades are going to be opened and closed in the same day. So now let me share with you the strategy that I am using. So this strategy uses 2 time frames, right? I want to use the higher time frame and the lower time frame. And why am I doing this? So one thing that you need to understand is that when you're trading, you need to follow the wave that the market is going with. You don't want to oppose what the market is doing, because for the market to go to the upside, that means there's more people willing to keep buying at higher prices than the prices keep going up. So if more people are still willing to keep buying and the price is going higher and people are keeping buying, you don't want to be selling at that point because you don't want to go against the majority of the market. So that's why you always hear the saying, the trend is your friend. We want to follow the trend, right? So how do we follow the trend? For us to follow the trend, the first thing that we need to do is to identify the actual trend itself. So let me show you how to identify the actual trend itself. So to identify the actual trend itself, we want to use something called the higher and lower higher concept, right? So how do you identify these trends, right? So first of all, the market moves in 2 ways. The market moves in an impulsive move and pullbacks. For example, if you see this is an impulsive move, and then this is called a pullback if the market is going to the upside, right? If you get another impulsive move, it will have to go and break above this zone. This is when we say this is an uptrend. And in this uptrend, you are going to see that this impulsive move here, the first impulsive move here, where it reverses, it creates a zone which we call the higher high or the high of the market, right? And we see a pullback. Once we see a pullback, the next thing we see is another impulsive move. And I always talk about this to a point that I think if you are a fan of this channel, you are already see where this is going. But this is not a break and retest strategy. Don't worry, right? So what I want to do here is for me to place these trades, I want to enter the market during this impulsive move because I want to follow, right? I don't want to enter during this pullback because I don't know where this pullback is going to end because I have a small account. For example, if I'm entering in this small pullback, if I buy here, and then if I put my stop loss at this, maybe at this zone right here, I'm going to be stopped out before the market moves to the upside. So what I want to do is I want to also make sure that I'm involved in this impulsive move right here. I want to be involved when the market is stretching up so that there's less chances of the market reversing down and hitting my stop loss. So let me tell you what I mean. If you look at this example, the market is moving at this point right here. Tell me, what do you think was the best point to sell this market? Because this was going to the downside. This is an impulsive move that is going to the downside. But when was the good time to be selling here? You can tell that everywhere from this point right here was a good point to sell up until maybe to this point right here before the market made a reversal. But this is a bigger time frame. This is a 4-hour time frame, by the way. All this was a good point for me to be selling. But how do I sell this? So first step is to go to the higher time frame, and the higher time frame that I use every day is the 4-hour time frame. So for example, I'm going to use this 4-hour time frame as an example, right? So look at this market pushing to the downside, and this is a big impulsive move going downside, right? And when do I place my trades, right? I don't place my trades here. So this is just an example. Remember, I'm going to try and show you in a real market how it looks like right now before the market moves, right? This is a strong impulsive move, as we all see, but we just want to go to the lower time frame and see when was the best point to place the trade. So on this impulsive move, if I click and go to the 15-minute time frame or the 5-minute time frame, you are going to see that within this impulsive move there were patterns that were telling you when to buy and when to sell. And what do I mean by this? Remember guys, I say, let's say the market is moving to the downside like this, right? We see this first move, we see maybe a small pull, and then we see a strong move that is going to the downside like this, right? So pay attention to this last arrow here. Let me change this to red. So if you look at this arrow, you are going to see that as a trader, I want to be involved at this point right here. But when do I get involved here? This is a bigger time frame, so this market is going to be moving fast to the downside, right? So let me pull out the pen here. Okay, so what I'm talking about is if the bigger time frame is looking like this, and we are at this zone red, this red line here, you are going to see that if this is a big and a sharp move on a bigger time frame, on a smaller time frame, this move is going to be looking like this. This is the reality of the market, right? It's not going to be sharp as you see here. So how do you place your trades on this one, right? On this move right here, you can see this is a very strong move to the downside. You could have sold anywhere here, but how do you know when to sell, right? So you're going to see that when you go to the lower time frames, this market is going to looking with a lot of reversals and moves, right? And let me show you what I mean by that. This is the 4-hour time frame, and let's click on 5-minute time frame. Let's find our line. So we marked this so that you can understand where this is coming from. So make this very small, and you're going to see that from our line here, right, this move was very strong on a bigger time frame, but on a smaller time frame, this move is creating patterns and reversals, right? You can see here, all these are patterns and reversals, right? And if you don't understand what I'm talking about, I will explain further, right? On the bigger time frame, this is just a very sharp move to the downside. On a smaller time frame, this is a very big move that can even confuse other traders, right? So where is it? So this is the move right here, right? So what I want to do is, number one, as I said, I want to make sure that my bigger time frame is in a strong impulsive move. For example, right? So now I'm explaining the strategy, and as soon as I explain the strategy, everything is going to make sense. So I want to see an impulsive move. So on this move right here, so when was the good place to place your trades here? The good place for me to place the trades here was if I go to the lower time frame. Now I know that already on a bigger time frame, I am in a downtrend, strong move to the downside, but then I'm looking to place the trades. So on the smaller time frame, I'm looking for chart patterns that show me potential reversals. What are these chart patterns? I'm talking about chart patterns like flags, rectangles, and triangles. So I like the flags and rectangles most of the time. I don't usually use triangles, right? So when you see here, you are going to see that there is what is called a flag pattern. A flag pattern is when you see a strong move to the downside and then a reversal which looks like this. On this reversal can mark a flag like, and then you wait for the breakout here, then you sell and expect prices to move to the downside, right? This is exactly what happened here. So if you see the market from here move to the downside, it creates a very big move to the downside, right? Here you can see the very big move to the downside. This is an example. I will show you a live example in a minute. But then you can see here, you have a flag. And why do we call this a flag? Because the market is pushing to the up, down, up, down. And why is the market doing this? The market is doing this because of supply and demand. Think about it. If the market, when the market was pushing lower here, there's a lot of people who made profits here. Even the market makers made profit because they took out all the people who were in buy trades here. So they made money on this big move to the downside here. And when the market reaches to this point, people started taking profits, right? And it's human psychology. It's normal that in the market, when you start making money, you want to pull out of some profits, right? So some people started taking profits here, and then some people, when the market started slowing down here, some people will start buying here, think that the market is going to reverse and push to the upside. But then what happens here is the market makers are letting you take profits and placing a lot of trades here. So when you take profits on a sell trades, it becomes a buy order. So when it becomes a buy order, there's a lot of buy orders that comes here and try to push his prices to the upside. Also, some people is going to be entering into the same market, but then the market makers know that you are buying at this point. So they will also, after this big move and a small a small flag here, is going to be followed by another big move to the up, to the downside. So if you were familiar with this, you could have let the market push to the upside here, and then this is when the market broke to the downside, like at this point, this is where you wanted to sell, right? You can wait for a break and retest, or another here break and retest, but then most of the time you just want to sell after the break, because sometimes it doesn't retest, right? So when the market breaks to the downside, you want to be placing your trades, right? So I will show you that this is not coincidence, right? So you can see after another move, right? So these patterns are different in size. Here's a very big one, right? And the big ones are the most likely that are going to be followed by a retest, but there's going to be smaller ones, right? Remember, in the higher time frame, we are in a strong move to the downside. We are in a strong impulsive move of a downtrend. So we are confident that the market is going to reverse here. But then when do we buy or sell? You can also come here and find out this market is creating the same thing. All these are flags. Market makes a big move, then it makes a flag here. So here is a big move right here. So this is the big move flag here, and then push to the downside. So everything that I'm showing you here can happen on higher time frames. Also, you can see flags. So if you use like the weekly time frame as your higher time frame, and then you are going to see that these flags can also appear on your 4-hour time frame. But here we want to be out and out within few hours and catch 20 pips, right? You can see this is another example. We are still in that big downtrend. But then what is the smaller time frame doing? It's following the downtrend, but it's creating these flag patterns here. You can see after the breakout, you sell, right? You can see a lot of the, right? So your flag, you have 2 points that you can connect your trend line, and that's enough to confirm that it's a flag pattern. Here you can see another flag pattern. You can see another flag pattern. So maybe you didn't have noticed here. So this is not a flag pattern. This is a triangle. But I'm not going to talk about triangles here because I don't usually use them, but I use flags a lot, right? So these are all flags, right? So this one is not perfect, but then you can see the point, right? But then we are still in a bigger downtrend, right? So right now, before I close this video and before you start implementing this strategy on your own, I want to show you this is not a cherry-picked strategy. This is something that is happening in the market, right? So right now, this is where the market is. And if I go to this higher time frame, I'm still on this big move to the downside. I'm still convinced that the market is going to keep going to the downside, right? So what I just want to do here is where we are, right? And if I go to the lower time frame, just go to the 5 minute, and I'm going to look where we are and see, is there any flag pattern or rectangle? Right here, I draw my trend line. Right, so I use the trend line to draw this. Boom, I have 1, 2, 3 move here, 4, right? And also I have confidence that the market is going to push down. Why? Because my higher time frame is on a long-term downtrend. So if the 4-hour time frame keeps going down for the day or for 2 days, right, I'm always going to place the trades, right? So this is the trade that I was supposed to place here, but I just missed a little bit here because the market pushed here. I could have sold here, but then I'm just going to place the trade because my take profit is going to be below here. So I'm just going to use my minimum lot size, which is 0.30, and I'll place the sell trade. When I place the sell trade, the next thing that I want to do is I want to put my take profit right at this point right here. So to place the take profit, I'm just going to put it right here. You just double click here on the trade and just you drag it to where you want the take profit to be. Now I can also take my stop loss here, put it above this zone, just like this. So this is the trade that I'm placing. Why am I placing this trade? I said, number one, our bigger time frame is in a long-term downtrend. We saw that by going to time frames 4 hour. This is the bigger time frame. We are going down. So if you go to the 4 hour, we are going to see this trade can play out in 4 hours or less, right? You can see here, if the market just drops and pushes down here, I'm just going to make profits, right? But then if you go to the lower time frame, you think that maybe this will take a lot of time, but then this is just a simple trade which is following the overall downtrend. So this is the strategy. The video have got a little bit longer than I wanted, but then this is the strategy, and if I had more time I would show you the buy position of the strategy. Like for example, let's say you were in the market, the 4 hour is showing you a strong move to the downside, right? Or maybe it's just moving like this, it's not making a lot of pullbacks. You just want to follow here. So what you do is go to the lower time frame, and usually the lower time frame is going to be moving like this, and then you want to catch the breakout or on the smaller time frames. So my drawing is really bad. I think I have to end this video now. So thank you for watching this video, and if you want to get free trading course and you want to get free trading signals and setups, and I'll share with you setups like this, I will leave the link in the description below. Before you go, I just want to take a screenshot of this, and then I will share with my members so that you see what I'm talking about. So take the screenshot here, and then I will save, and then open my WhatsApp and my Telegram, and I'll post this. Go to WhatsApp, go to our group, and then I'll post everything. So if you want to join our WhatsApp, as you can see, there's a lot of discussions that happen here. You can join up. I will leave link in the description of this video. So thank you for watching this video. If you liked it, subscribe, and I'll see you in the next one.